Welcome to Retail Retold, the stories behind how that store landed in your neighborhood. I'm Chris Ressa, in conversation with the people and stories shaping retail and real estate. Brought to you by DLC.
This episode of Retail Retold is sponsored by Monarcha Commercial Cleaning. Thank you for supporting Retail Retold. Monarcha Commercial Cleaning provides janitorial and day porting services. As a customer-focused commercial and specialty cleaning organization, built on the values of integrity, reliability, trust, and quality performance. Serving the Dallas-Fort Worth area and surrounding communities, Monarcha's expert team is committed to keeping your business looking its best. To learn more, visit monarchacleaning.com. That's MONARCACLEANING.com.
Welcome to Retail Retold, everyone. Today it's just me, and today I wanted to talk about something I find rather interesting, and I keep getting asked a lot about, which is, why are banks opening so many branches? Every time I say we're adding a new bank credit union to one of our shopping centers, I get the same reaction. Eyebrows go up. Really? A new bank branch, 2026. So I want to talk about what's actually happening, because I think it's a lot like what's transpired over the last 10 years with retail stores. And I get it on the surface. Most people don't carry cash anymore. People can deposit checks on their phone, transfer money on their phone, pay bills on the computer on their phone. You can apply for a loan without ever walking into a bank. Many of the things that used to require a physical branch now can happen sitting on your couch. So I think naturally people assumed physical branches would one day go away, except they didn't. At DLC, we've done a bunch of new deals recently with national banks, credit unions, and some of the largest, most sophisticated banks in the country are spending millions, if not billions of dollars opening new branches and renovating existing ones. So I think the question is why? Why are they doing this? I've been asked this a lot lately, so I thought it was a good solo episode to talk about what's actually happening. And when you talk to someone about this, you'll often hear the connection with the consumer as a reason, and that's part of it, but I think there's many other more interesting business cases of why banks are spending so much to open new branches. And I think the mistake people make is confusing what consumers used to do inside the bank with what were and what are the highest margin items or highest margin things the bank can do. Because those are two different things. And clearly the smartphone didn't kill the bank, but potentially it changed its job. For decades, a bank is where you deposited a check, you withdrew cash, you transferred money, talked to a teller. People still do that. Technology made it possible where you don't have to do it that way. And technology allowing it to not have to do it that way, it made the economic value of the bank, in my opinion, better. Now the bank branch isn't just about processing low margin transactions. Many customers now do that themselves at their homes. Now the bank can spend the time on the things that have the highest margin. And it all starts with deposits. Deposits are like the raw material of banks, as we know. Banks gather deposits to do loans, invest, operate the business. But in today's environment, right, the highest yielding deposits for the bank, not the consumer, are a physical location, right? If you're sitting home shopping online for the highest yielding savings account, you're not really focused on all these other things that physical branches are. You care about the rate. One bank pays more and you're gone, because it's pretty easy to move digitally from one bank to the other for digital only banks. A bank can obviously acquire your business digitally, and they do when there's digital only banks, but they have to pay up for it. It's expensive money. If you look at online only and online savings accounts, they are expensive for the bank and they're better returns for consumer. But the loyalty of that customer is not nearly as strong as a physical bank. And if you think about like what happens in a physical bank. It's just not about rate shopping, right? Checking accounts are there, savings are there, potentially a mortgage. The kids may have accounts there. A business might have an account there. You might have a credit card there. There's completely different relationship with this. And the bank isn't competing with that person's money every morning. The deposits are much stickier. And when you're talking about as much deposits as a bank gets and how much they have to pay out in interest versus what they lend out or invest, those small increments start to matter. So the deposits are one. And the second piece is customer acquisition. This is where the bank story looks a lot like what we've watched happen in retail. For years, everyone had this concern, retail apocalypse, about what the impact of e-commerce was going to do to physical retail. And then something interesting happened. Customer acquisition costs became the new rent. Digital looked cheap because you didn't need physical stores, but as everyone went online, search got more expensive, social media got more expensive, digital advertising got more expensive. Everybody started bidding for the same customer. But for many businesses, scaling through physical locations turned out to be more profitable than endlessly buying customers online. Fast forward to today, I don't know, we're sitting at somewhere over 95% occupancy in retail real estate. The store's purpose is pretty rooted in the foundation of America. And it seems to me that banking is going through something very similar. The banks are bidding for everyone's attention online, just like retailers were. Search advertising, social media promotions, higher interest rate, credit card offers, cash incentives to open an account. Gets expensive. And if your customer is just chasing the best offer, how valuable is that relationship? Now just take a small business in a market where, they have pretty strong revenues. They need a place for deposits. They take cash. They're using merchant services for credit cards and whatnot. They have payroll. All these things feel to the consumer a lot easier at locations. And digital banking, struggles a bit with executing high value financial transactions at scale, right? They hit some operational risk behavior walls when trying to execute on those. And if you build this like network of stores, right, or bank branches, right, someone sees you every day, there's this like sense of security. There's someone to go talk to quickly. You can go in a pinch to go do something. Your kids see it. And now you're not talking about acquiring a customer who could be worth something to the bank for, 5 years. You could be talking about a family of customers who are part of the bank for decades. And the physical banks help acquire deeper, long-lasting, multi-product relationships. And those multi-product things are the highest margin things for the bank. And so the natural reaction to that is to open physical bank branches to go acquire deposits at a cheaper cost than online, and then go and take that branch and let the low margin tasks happen outside the bank and use the bank for the multi-product high margin things. And the economic value of the bank is now higher than it once was. And, again, here's probably what's most fascinating. The branch and the app aren't necessarily competitors. They work well together, just like retail stores. There's been many a CEO of banks who have said that their digital presence grows in a market where they have more physical branches. You might open the account digitally. You might do a bunch of your banking on your phone, and maybe you walk into the branch infrequently, but you've driven by it 500 times. You know where it is, you recognize the name, and you know where there are actual human beings inside that bank if something goes sideways. That physical presence makes people feel better, right? And so I think traffic and how many people walk through a bank are important. but what are the deposits of that bank? What does that funding cost? How many customers does the bank acquire in that market, and how long do they stay? Do they serve that community with a multitude of products that the community wants? And now you're talking about a different purpose of the bank to a consumer than they used to think of the bank. And so with that, what we've seen over the last few years is significant growth of physical branches. These banks are building tomorrow's customer acquisition and relationship platform. And it happens to be 4 walls on a great corner in your community. I've been fascinated over the last few years of how many banks we've done in our shopping centers and continue to put in our shopping centers. And I think a lot of people are, and I hope this episode answers a little bit of why it's important in a society that uses less cash, why it's still important for banks to have physical presence and physical branches in communities around the country. All right, everyone, that's it for today's episode. If you haven't already, please rate and subscribe to the show. The algorithms love when you subscribe and when you rate us. Please give us 5 stars, hopefully, and stay tuned, and we'll see you next week.
Appreciate you watching. Hit subscribe. See you in the next one.